The coronavirus is upon us, and the question is, are you doing everything possible to best navigate your business through this difficult time? The answer has to be no. Why is this? It's because almost everyone has limited experience in these uncharted coronavirus waters. But we have already worked on behalf of over 50 businesses to optimize how they respond to these threatening times. In this video, we'd like to share some of our experiences with you and hope to give you some more context around options for navigating your business through these challenging waters. We will provide specific examples of what 3 companies have recently done to maximize their ability to respond to the new market conditions. And some quick background, all 3 of these companies are CFO1 clients, and all of them went through the COVID-19 game planning sessions that we've created. The following are the outcomes of those efforts. First, the coronavirus game planning details. We used a coronavirus one-page game plan, and what you see in front of you is a completed version of that. If you would like to see this or receive this, just simply ping us and we'll send a copy of this to you. And it starts at 1 page, and then when we add in the content specific to an organization, it ends up being more like 4 pages. The game planning details include part 1, identify the company's current position on turnover, overheads, wage costs, receivables, payables, and any typical ratios for that industry. Part 2 is clarify the key issues that need to be addressed. This often ranges from retention of key staff to protection of directors' personal assets, but always includes speed of decision making, clarifying correct cost reductions, and maximizing government support. Part 3 is agree on the solution strategies. And part number 4 is we identify 3 revenue scenarios that seem appropriate for this type of business and industry in this marketplace. And then we pull through that, the reductions in staff, reductions in costs, and we look at how that plays through all the way down to the cash flows. Part number 5 is we document a 3-stage plan for cost reductions, because oftentimes you don't want to go from 0 to 100 miles an hour, but there's a staged milestone that things can be triggered and further reductions can take place. And part number 6 is that we review the cash flow implications for each of the scenarios and executing on the first stage that's agreed upon as the first step. So in our first example, company number 1, it's a Queensland restaurant doing about $4.2 million in turnover. It's got 25 employees. And what we found in looking at the potential strategies, we actually came up with quite a few because this is a pretty dramatic situation. They had good surplus cash reserves coming into this and were planning a renovation to extend their function space. Now they decided to hold on to the cash, and they're utilizing this to support the holding costs to ensure the business can reopen when the timing makes sense. Number 2 is deferral of equipment finance payments, bank loans, fees, merchant terminal rentals, etc. Number 3, seeking reduced insurance premiums from the broker, business continuance, wastage, etc. Number 4 is reduction in stock, cash on premises. For example, the floats have all been pulled back in and banked to prop up cash flow. Number 5 is payroll tax refund of about $2,000 was put into play. Number 6, work cover reduction was about a $2,000 benefit. Number 7, cease equipment on hire, and they will buy and finance new equipment when they reopen. Number 8, return kegs to suppliers for credits. 9, freeze down food to preserve stock. 10, ramp up security and monitoring for theft and break-in rife. They had already seen an increase in vandalism in the area. And number 11 was interesting to decide on takeaway or not and providing that. We ran the numbers which showed they were better off by about $10,000 per month if they could sell takeaway food and booze. But the business owners made the decision to close knowing the profit and cash loss due to risk and concerns around self-preservation. Number 12, we'll get the full $50,000 and $50,000 second tranche of the ATO cash boost. All of their ATO debt is up to date, so they expect to receive about a $35,000 cash injection or refund after the current liabilities are paid. So after those results were modeled, the net results were, number 1, we downgraded the revenue to $3.05 million, which represented a 28% drop off of their existing run rate. Number 2 is they reduced the number of employees from 25 all the way down to 2 in this first initial stage. They left 2 FTEs on clean and admin to do small amounts of takeaway and test the sustainability of that. So even though there was an initial decision to not do takeaway, there is going to be a small test and see how that goes. Number 3, went from $80,000 wage bill per month to a $10,000 one. And then stage 2 will take that all the way down to 0 if it's required. Number 4 is reduction in operational costs from $70,000 a month down to $25,000 a month. Insurance and rent and electricity and water are still the big ticket items that are continuing being managed. And as the government changes policies, those things will be updated also. Number 5 is there will be 6 months of working capital runway before normal trading needs to resume without additional financial actions required. Number 6 is they're going to maintain strong communication with their workforce throughout this process in order to bring them back when conditions improve. And that's really the net result for this first company. It obviously is very much impacted in this short term over the next several months. And the outcome gave the owners a lot of clarity and confidence that they can weather this. They now have clarity on the cash flow that they can make this happen, and that they're looking forward to coming out of this process on the other side, very well positioned and ready to jump back into the marketplace in a very good position. So company number 2 is a New South Wales engineering firm with $2.3 million a year turnover, 16 employees. And this is an interesting one because some of the strategies that were used were some of the basic ones: tax refunds. Number 2 is they qualified for the full ATO cash boost, $50,000 in each of the periods. Interestingly, on this one, they're going to actually increase their LinkedIn marketing spend with the idea that they have more of their key contacts, potential clients, at home in front of computers. And so the idea is that there will be better engagement, more time to be thinking and developing some relationships online. So they're actually increasing their spend there, and they're also going to increase their remarketing spend on identified sales leads, which is all about tracking who comes to your website, who opts in for various types of activities, putting pixels on those types of individuals, and then remarketing them when they travel to different areas of typically Google-related web locations. And that's, again, more of an offensive play. It makes a lot of sense in this situation. And then number 5 is attempt to renegotiate one bad equipment finance agreement, just on a piece of equipment that they use inside the office that the terms seem to be a little bit crazy. And with a lot of other things up in the air and a lot of other customers up in the air, it seems like an opportune time to push on the renegotiation of that piece of equipment and just see what comes from it. I'm just trying to keep these playbacks a little bit different and unique to try to create as much value for you as possible. So in this table, you actually see a cash flow outlook table that we use, and this is the place where we model out the 3 different types of revenue levels, and then we look at what types of wage and overhead and payment deferrals we need to do to maintain minimum cash balances. So in this case, we looked at keeping the revenues exactly the way they were, dropping it by 12.5% and 25%. And then we also looked at starting immediately with a headcount of a reduction of 3 people, just as a way of maximizing the amount of cash flow, reducing as much cost as humanly possible going into any potential turbulence that they could see. And so when you look at the net result of that, the company was, we downgraded their revenue by 12.5%. Number 2 is we reduced the work week to a 4-day work week for all staff, which saved about $20,000 a month. And again, this was done proactively before they even actually saw a reduction of their workload, with the idea that in all likelihood it's coming, but it hasn't hit that sector at this point in time. And if nothing else, they thought it was a good chance to really push their systems to see if there's any fat on it and whether they can maintain the same level of productivity on their current projects without taking a hit. And obviously they can ratchet it back and increase it back to a 5-day work week if there are any problems show up. Number 3 is the reduction in operational cost by $13,000 per month, and that's just looking at the lowest hanging fruit and again testing some waters and trying to figure out whether some licenses and some fees were necessary or there was a way of reducing costs, not just now but even longer term. Number 4, they decided not to defer any payments at this time. And number 5 is payroll tax refunds equaled about $21,000, which was processed. And then the net cash position is expected to improve by over $100,000 over the next 4 months. And that brings us to company number 3. Queensland Building and Construction Company, $40 million a year turnover, 75 employees. In this company, some of the strategies that were used was deferral of equipment finance payments, bank loans, fees. The second one was looking at reducing costs of all types, insurance premiums, obviously a review of all subscriptions. And unlike the engineering firm, this was not a time that they felt was really opportunistic to do a land grab in terms of potential new clients or new work. It was more of a constriction time. So in all likelihood, the marketing budget is going to be cut, but at this point in time of making this video, final decisions have not been made. Number 3 is payroll tax refund of about a $60,000 payment. Number 4 is we'll get the full $50,000 ATO boost on both payment periods between now and June and July to October. And number 5 is that they're applying for that Queensland government loan of $250,000. Number 6 is a 4-day work week for employees, maintain headcount, retain strong connection with workforce to bring them back, full-time conditions improve. And number 7 is assess new or slightly modified revenue streams. And so here, when you look at the cash outlook, the revenue has really been hammered, reduced down to $16.2 million. Stage 2 is $11.9 million. Stage 3 is literally $500,000. Wages go from $3.7 million all the way down to $750,000. Overheads continue to get cut. Staff count goes from 75 down to 10. Cost reductions increase. Minimum cash balance is not tapping into the bank loan of greater than $2 million. So the net results for the actions that are being taken currently are that, number 1, downgrading the revenue by 30% initially. Number 2 is creating that 4-day work week for the staff, saving $87,000 per month. Number 3 is reduction in operational costs by $33,000 a month. Number 4 is deferral of 6 months of asset finance obligations, freeing up $240,000 of cash. Number 5 is deferral of ATO debts, freeing up $500,000 in cash. Number 6 is payroll tax refunds of about $60,000. It's already been processed. And number 7 is net cash position is maintained at its current level. So those are 3 different examples of how companies in different industries have responded to this change in marketplace. And hopefully those give you some specific examples and ideas on what you can do with your organization. One of the biggest things that we continue to see is the speed of making decisions and the quality or clarity of information that people have to make those decisions, such as a real accurate cash flow modeling to understand what is the impact of those government programs, what will be the actual impact of reducing subscriptions and reducing various types of overheads, or reducing 3 staff versus 10 staff versus 20 staff. And it's critical that you have that information in front of you. So we go back to the original premise that you're not doing as much as you could to help navigate your business through this. It's really under that context of experience. And yes, it's been some very busy weeks here ever since the coronavirus has been approaching us. And at this point, though, we have already helped many, many business owners navigate through this. And we look at our list here, it's already fairly outdated, but we say that we've effectively helped stand down over 1,000 workers. And we've had over 100 conversations with the ATO on deferring payments, restructuring programs, and learning what their likely next moves will be. And we've helped negotiate better payment terms with vendors and other types of suppliers. And we've also talked to all the major banks to negotiate better terms and new funding for multiple clients. And finally, this all culminates in number 5 here, which helps retain millions of dollars in cash in our customers' accounts so they can have the best options for what to do next. So we simply have more experience on how to best navigate these coronavirus-infested waters. And we want to help you as best we can without going broke. And we can help you by reducing labor and operational costs in a way that is legal and helps maintain the relationships with your current teams. We can maximize government support and include those improvements in forecasting so you can actually see what the impact will be for your cash flows. We can help retain the maximum amount of cash possible and improve your debt positions. And number 5 is most important. It's get your company optimized to rebound as quickly as possible after the coronavirus issues subside. And we've thought a lot about this, and how we can best help you is take you through 4 simple steps. Step number 1 is have an initial fact-finding call with you to understand all of your unique dynamics. And step number 2 is review your financial details, looking at your accounting app and tax returns and maybe some other details that help us understand the context of your business. Step number 3 is to create a game plan that includes both defensive moves, which involves cost reductions, labor reductions, etc., as well as offensive moves, looking at government programs, potentially renegotiating bad debt, and looking at other revenue opportunities. And then step number 4, after we've created that game plan, we have a second call with you to review the strategies and talk through the execution of them. In these chaotic times, we really want to make this easy. So there's a no pay guarantee. If you're not 100% satisfied with the strategies that we identify in the first call, or the quality of our understanding of your business, then you don't pay. You just simply walk away. It's never happened, but it's absolutely an option. Number 2 is we provide very flexible payment terms. We get this is not a time to be paying additional fees and bills, but we also need you to put some skin in the game so you take this very seriously and you follow through on the agreements that are made. And the last point is, it's a bit of a side note, is due to the internal costs of providing the service, we can only grant these coronavirus response sessions to a final 50 Australian businesses because it is labor intensive to come up with these things. So in conclusion, your cash is decreasing every day. So be sure to get your spot with us immediately. This may sound like a sales pitch, but it's really an offer to help.